Hi everybody, my name is Tyler Patterson. I'm an 18-year-old foreign exchange trader. I teach people how to trade currencies in the foreign exchange market, and I have a company called Powerhouse Investments LLC. If you are interested in becoming a part of my group, you can message me on social media. I also have a signal chat, so I'm part of the company I Am Mastery Academy. If you are already in that company, you cannot become a part of my group, but you can get in my signal chat for a fee, and I also do $50 sessions for $50 sessions for an hour, so you can get assistance. So if you are interested in any of these services, hit me up on the side, any social media. Gonna put it right here and also in the description box. But today we are going to talk about a very important topic that I have not covered on my channel yet, and it is called market movers. That's the topic. The topic is market movers. Now, there are two types of market movers, right? And the reason that market movers are very important is because they do things that will affect our trading, but the things that they say and they do are kind of out of our hands. So as a trader, you have to be very proactive in what you do while you're trading so that you won't be affected by these market movers when they do certain things. Because as a retail trader, you are actually trading against these market movers, right? Actually against one of the two market movers. You're actually trading against one of the two market movers. And the reason why the first market mover is central banks, right? So central banks, or it could be any entity that has enough money to push the market one way or another, right? Now, as a trader, your job is to trade the same way that a market mover will trade, so that when they decide to move the market, you are moving in the same direction that they're pushing the market, right? But the reason that you are trading against the market movers is because since they have so much money to affect the market and move it one way or another, sometimes they will try to push retail traders out so that they can take all the money for themselves. And the reason why is because imagine you having a piece of pie, right? Now, market movers, the first type of market movers, the central banks and things like that, they have billions and millions and billions and all this type of money to pour into the foreign exchange market, and that's why they're able to push the market one way or another, right? But if you add all the retail traders up into this, they have to get their profits out as well. But the more people that are in the market, the less money it is for the banks to make. Right? It's less money for the banks to make. And the banks don't want this because even though they're making billions of dollars, they want to make more. So what do? Right? They push you out. Think of it as a piece of pie, right? If it's two people splitting a piece of pie, that's a pretty big slice of pie. But if there's 8 people sharing a piece of pie, that's less pie for everyone, right? Less pie for everybody, get complicated. Oh, I want this slice because, as you cut the pie, pieces of the pie get bigger and smaller as you turn it in a circle. You're like, no, I want this piece. No, I want that piece. It just gets complicated. So to uncomplicate things, a lot of times market movers such as these central banks try to push people out of the market before the market is actually going to move in the direction that they want it to go. Anybody ever heard of a fake out, right? You see a small impulse of the market move, maybe in the upwards direction, and you like, boom, I'm on a buy. But then you see it drop all the way down, right? Right? You see it drop all the way down. That's called a fake out. That's called a fake out, right? The market wanted you to get in the buy. The market movers wanted you to get in the buy just so they could push the market against you, right? Or you ever see, you set a stop loss. You set a stop loss on your trade, right? All your indicators lining up, all your price action lining up, crossing to a T. You getting a sell, right? You getting a sell. The market starts moving up, it hits your stop loss. As soon as it hits your stop loss, it goes back down for the sell, right? It goes back down for the sell as soon as it hits your stop loss. This is because the market movers know what type of education is out there, right? They know what type of education is out there. They know about support and resistance. They know, pretty much where everybody gonna set their stop losses at. So they're going to make everybody stop out, and then the market is going to go in the exact direction that you thought it was going to fall in, right? These are called fake outs, and this is the type of stuff that the market does. Market movers do, the banks do, that you are not in control of, right? You're not in control of this. So that's why it's important to always leverage correctly. Always leverage correctly. Make sure that you're not being like emotional in your trades. Make sure that you're not, you know, all your you dot your I's and cross your T's when you hopping into trades. And me personally, I don't use stop losses on my trades. Like literally every time I get in a trade and I think it's going to go one way, it literally goes that way. So I make sure I don't over leverage and I don't use stop losses, because anytime that I've been stopped out, I look back an hour later and the trade literally goes in the direction I thought it was going to go in. And had I not been stopped out, I would have been good. I'm not telling anybody else to do that. I'm just saying, me personally, that's what I do, right? The second type of market mover is a person that has enough credibility, right? Enough credibility to actually move the markets. Their words hold so much weight that they can move the markets. So this is any type of world leader. So for example, for the United States of America, if Donald Trump, you know, when Donald Trump shut down the government, he announced the government shutdown, right? That made the USD drop so hard, right? So hard, right? Because he announced the government shutdown, right? And if you announce a government shutdown, everybody else is going to assume that our economy is doing bad. If our economy is doing bad, then the United States dollar loses its value, right? So in that moment, you could have either capitalized off of that and sold and made money, or if you were in a USD buy, you were, it was pretty, not pretty good. Another example is Brexit. I don't really know too much about Brexit because I'm not really into it. Like, I don't care, but I care to a certain extent because it's an effect of my money. But I don't even trade GBP pairs because they so weird to the point where I never really got into it. But it's something about Europe, Europe and the Great Britain basically separating because one of their world leaders is doing something weird or something like that. Like I said, I don't know too much about it. I just know one day in 2018, around November, the GBP started going crazy, going for thousands of pips at a time. It went down 1,000 pips, then it went up 1,000 pips, and it was a crazy day. Okay, it was a very crazy day. And this is how world leaders basically affect the market, or anybody that's in a position of power. It don't necessarily have to be a president or a leader. It could be a senator, or, you know, just if they are announcing something about the economy and they are actually in a position of power or leadership and their word has credibility, then it's going to affect the market in one way or another. And the reason that they are called market movers is that because whatever they say will make the market so versatile that it could literally like make or break you. Like if, you know, like I said, when the government got shut down in 2019, if you was in a buy and everything basically sold 200, 300 pips, you feel me? And you didn't have a stop loss, that's not a good look. So what you want to make sure you're doing for that is checking the news, seeing what any world leader is going to speak. And if you do not understand fundamental analysis, you want to try to stay away from these trades. So a good app to use for news is MyFX Book, and Bloomberg, and Investing.com. See when world leaders are scheduled to speak, check the news, and stay away from those trades if you do not actually know how to trade on fundamental analysis. And that's going to really help because you don't want to get stuck in a trade and all your technical analysis is lining up and you like, I know it's going to sell. And then some crazy news comes out or some world leader starts speaking that you have no idea about. And all of a sudden you like, I can't trade. This trade just went 300 pips in the opposite direction when it's not even that. It's just the fact that you didn't actually know that that person was supposed to speak. Therefore, you were not prepared. So yeah, that's basically it. That's all the gems for today. Like I said at the beginning of this video, if you're interested in my mentorship, please hit me up. If you want to get in my single chat, please hit me up. It's only $100 a month. And then my sessions are $50 an hour. Subscribe to my channel, turn my notifications on. And yeah, thank you all for watching my video and for the constant support. Really appreciate it.